Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, another day when we will see how the markets trade in trade. Also, we'll try and understand what is the trade setup like right now. What are the key strategies that you should be adopting in the current market scenario? We're on the last day of the week, Friday. Up until now, we've had very volatile week thus far, but definitely the markets extended their winning streak for the third consecutive session as of Thursday. Even though uncertainty still persists as Nifty continues to trade within a limited range, but the broader markets definitely outperformed, and that remained evident yesterday. Within the small cap stocks were leading the way. The Nifty mid cap advanced by over 1%. The Nifty small cap also posted a strong 1.67% gains. Now, what we also saw is that among the large caps, it was HDFC Life that emerged as the top Nifty gainer yesterday, surging 9% after better than estimated December quarterly earnings. And when we're talking about earnings, of course, that will be important to see. At least four big numbers is what the markets will be reacting to today. That will be Reliance Industries, the biggest boy of the D Street, and the biggest stock listed on the stock markets by market cap. The second one will be Infosys. Axis Bank will be another one, and LTI Mindtree. These will be the four big numbers that the markets will be reacting to today. Of course, globally, how the setup has been is something that you should look at. Cautious note on Friday as far as the Asian markets are concerned. Even overnight in the US, the markets reversed their earlier gains. Major indices closing in the red. S&P 500 slipping by 0.2% to break a three-day winning streak. The tech-heavy Nasdaq also dropped by about 0.9%. The Dow Jones declined by 0.16% as well. The big tech stocks definitely weighed on the overall performance. Now, this is where Asian markets also come into the picture. Investors here are keenly awaiting the economic data from China. So the Asia Pacific region saw mixed performances right in the opening trade today. ASX 200 was flat. Nikkei fell by 0.2% in the starting of the day. Topics dipped by about 0.48% as well, and the Kospi hovered around the flat line as well. GIFT Nifty trends are absolutely flat with a negative bias. At 23,320, we could be looking at a muted start again in trade today. Like I said, in China, attention is focused on how the December industrial output and the retail sales figures, along with the fourth quarter GDP data, will come out. As far as the commodity picture is concerned, gold prices again surged to a 1 month high on Thursday as softer US core inflation data fueled the expectations of a dovish Fed policy. Spot gold rose by 0.8% to $2,718 an ounce. Oil prices also retreated after reaching their multi-month highs earlier this week as well. How are the foreign flows? Well, the FPIs remained net sellers of the Indian equity markets for 10th straight session on Thursday, and the domestic institutional investors have been buyers for 22nd consecutive day. Now, when we look at the FPIs, yesterday they sold 4,342 odd crore rupees in the Indian market. Domestic institutional investors bought stocks worth about 2,228 odd crore rupees as well. Now, as far as the key stocks are concerned, let's look at those which you need to keep an eye out on. Reliance Industries, again on a consolidated Q-on-Q number. Yesterday, the numbers came in at around 7:30 p.m. Revenues were up 4% at 2.39 lakh crore rupees. EBITDA came in at 43,789 crore rupees. Again, there was a jump here. Margins came in at 18.2% versus 16.9%. Net profit was up by 13.5% to 21,930 odd crore rupees as well. Now, all the divisions were also, they posted ahead of estimate kind of earnings. Oil to chemicals business, here, the revenue was down by 4% to 1.49 lakh crores. But when we look at the kind of oil and gas revenues were seen, that was up by 2%. On the retail division, the revenue was up 18% at 90,351 crores. The digital revenues were up by 4% to 39,733 crores. And when we look at the other revenues, that was also up by about 5% for the other companies of the group at 12,236 crore rupees, largely ahead of estimates is what we saw for Reliance Industries. Infosys, the second largest IT services company, that raised its FY25 revenue guidance to 4.5% to 5% in constant currency, up from the earlier projection. The adjustment reflects improvement in discretionary spending in some of the key markets like US and Europe, coupled with the company's strong Q3 FY25 performance as well. But the ADR was down, so you could be seeing some kind of a dip right in the morning trade. LTI Mindtree, here the revenue was up 2.5%. We also saw the EBIT down by 8.9%. So mixed revenue, mixed picture there. EBIT margin was at 13.8%. It's also slipped below its earlier price point. When we look at the net profits, that was also down by about 13.5%. Again on a Q-on-Q basis. So that was something that we will see reacting to. Axis Bank is the other one, the third largest private sector lender in the country, reported a modest 4% year-on-year increase in its net profit for Q3 FY25, amounting to 6,034 crores. The subdued growth was attributed to higher loan loss provisions caused by increased fresh slippages, along with the tepid growth in net interest income and other income as well. So those are some of the numbers that we will look at in terms of the earnings. Havells, again, will also be important to watch out for. It's been a keen sector that everybody has been looking at. On a consolidated YOY numbers, revenue saw an uptick of 10.8% this time around to 4,889 crores. EBITDA came down a bit by 1.6% and margins came in at 8.7%. This was also slightly lower than last year's same quarter. Net profit also was down by 3.5% to 278 odd crore rupees as well. But the board has declared an interim dividend of 4 rupees per share. But let's welcome our guest on board to understand more about the markets and the strategies that you need to keep. We have Mayuresh Joshi, Head of Equity Research at William O'Neill India with us. Warm welcome to you, Mayuresh. Good to have you with us. Do tell us, how are you looking at and sifting through all these big numbers that are coming about? Are they overall meeting the estimates that we have? Are they coming in not as feared, as disappointing that we were talking about earlier?
Morning, Sakshi. I think if you look at the IT pack, we started off with TCS and what the street was expecting and what TCS probably delivered was better than most market analysts and expectations of the street itself. HCL take decent numbers, but I think the guidance probably is something that's quite departing for HCL Tech. Infosys recent set yesterday again, expectations in terms of the revenue guidance, they have exceeded the revenue guidance at the higher end. I think the best case scenario was getting worked at 4.75, and they've actually come at 4.5 to 5%. So that is a positive surprise. Reliance's OTC business surprised positively. Retail businesses are holding up. So I think there are pockets within the markets actually, at least on the larger names, where numbers have probably held up. There has been a decent show. Management commentaries sound very, very optimistic. But it will be those select pockets as far as the earnings season is concerned. And therefore, I think large parts of the market might still witness earnings softness, and therefore some ground downgrades as far as earnings are concerned is still somewhat to be expected. Having said that, I think the consumption trends again are clearly going through a slowdown patch. How the government will address this through the budget or outside the budget is going to be extremely critical. And therefore, I think a combination of this factor is probably weighing down in terms of slower GDP estimates that the RBI and the government have both pegged in terms of their advance estimate numbers. Obviously, I think the expectations in terms of better monsoons, a better Rabi season, expectations of La Nina conditions actually evolving would probably mean that the rural economy might show a sustained recovery over the next few months and the next few quarters as well. And that is a positive that the markets might probably take. On top of that, I think what probably happens on the geopolitical front with Trump resuming office on the 20th, what kind of policy initiatives does he take? And what probably happens to core inflation on the global front? Though the print that came a couple of days back as far as the US is concerned has reignited hopes that there might be a June rate cut as far as the Fed is concerned. These data points are evolving. So I think we are going through volatile times.
Okay, got that. We have the pre-open rates with us. So let's quickly look at how the Nifty is indicative of an opening. 150 points lower in trade is what is being indicative of as of now. Oh, it's reduced 53 points now. 23,257. This is a still better number. 0.2% of a downtick. It was being indicated by the GIFT Nifty that we will have a muted start. Let's see if this improves also going forward from here. But let's look at the big numbers that we were discussing. Reliance Industries, how is that getting indicative of opening in the pre-open trade? Well, remember, the numbers largely came in ahead of estimates right there. And you are seeing a 5% uptake. If that happens, that's going to be really cheering all those investors. Remember, Reliance Industries has had a negative year in terms of 2024, a 5% downtick, and finally the earnings could actually come into its rescue. 1328, that could be a strong one to see. Again, let's look at Infosys right there. Largely, the numbers were good and okay, also in line with the estimates. But the stock had also run up ahead, and ADR was also down, and therefore, and there was some kind of a guidance concern that investors in street was having, and therefore 3.3% downtick is what you could see on this one. 1863 is being indicative of. Let's also pull up Axis Bank, for instance, from the banking space to see how that one also is opening. A modest 4%, 4% kind of an increase on a year-on-year basis. We saw a 3.2% downtick for this one, 1004 on this one. Another IT major is LTI Mindtree that we wanted to see. Remember, it has been an underperforming stock thus far, and the earnings again have been a mixed bag this time around too. 4.5% downtick again, 5705. Those are some of the big numbers that we will be looking at as well. Let's also welcome Kiran Jani. He's the head of technical research at Jainam Broking. He's also joining in on the show with us. Kiran, warm welcome. Good morning to you. Tell us how does the setup really look like on the Nifty Bank? What are you going to do today?
So looking at the daily price chart of Nifty and Nifty Bank, both have made a significant bottom for sure. On Nifty chart, we can clearly see the bullish divergence on daily price chart, and with that, since last 3 days, we are seeing that market is trading into the heart of higher bottom pattern. So unless and until now, market is not breaking down the recent bottom somewhere around 23,000, we are expecting price to move up and retest its 200 is moving average, which is somewhere around 23,800. So definitely, good price move should come on Nifty. Coming to the Bank Nifty looks again very strong in the Nifty. Clear cut inverted hammer placed on daily chart at bottom. When the momentum indicator was in oversold territory. From that, the Bank Nifty has jumped over 1500 points now. Until and unless Bank Nifty is not breaking down below 49,000, we can expect Bank Nifty to retest its 50,200 to 50,700. And once the 50,700 cross, then we can expect some sharp rally also. So as of now, buy on the dips would be the strategy. 49,000 for the intraday point of view, you can keep it as in stop losses. For Nifty, because there are heavyweight results are there, Infosys, Reliance, so there are chances we can see some downtick somewhere around 23,250 to 200, where we can buy Nifty with the strict stop loss of 23,150. If today prices is not breaking down 23,150, then we can expect price to retest 23,350 to 400 again. So both the indices, buy and dips would be the strategy.
Okay, got that. Coming back to Mayuresh, and let's discuss Reliance now, particularly Mayuresh on the earnings front. We do know, like I pointed out, the stock has been lying low for the entire part of 2024, despite all the bonus activity that took place. Finally, the earnings fueling some spirits back into the stock. Will this continue?
That's the hope, Sakshi. And again, I think the expectation for Reliance largely were muted for this quarter. There is hints of under ownership as well with the kind of sharp correction that we saw exhibited through our EPS and RS ratings as we see it in markets like India. But again, I think the O2C business has surprised clearly in this quarter's numbers. The retail businesses, both Reliance Retail and Jio, are holding up quite nicely. And that is where I think the entire sum of parts valuation is coming through, because the retail businesses will now probably garner more than 50% of the overall EBIT contribution. And therefore, I think as these businesses mature and grow even further as we head into the next year and a half, there is also the expectations of demerger that is happening on the Jio business. So that will keep the stock under a lot of enthusiasm as far as the markets is concerned. And as far as the upstream business is concerned, because of the varied feedstock options that Reliance probably has, it always has a better showing compared to the rest of the pack. So I think the question here is retail businesses will grow, whether O2C business will continue its good performance, specifically considering how the delta spreads are playing out, are expected to play out, how the downstream product pricing is expected to play out as well, and how global demand supply dynamics, specifically the supply chain dynamics, are expected to play out as well. So again, I think the bottom line, muted said expected from Reliance, but I think they delivered much more than that. And that's why the street is taking it very, very enthusiastic.
Mm-hmm. Okay, Kiran, coming to you as well. What would you do on Reliance Industries today?
On Reliance, right?
Reliance, yes.
Yeah. So looking at Reliance price chart, we are giving buy call on Reliance since couple of days. Looking at daily price chart of Reliance, somewhere around 1220, 1250, it has created a very good bottom, and from that level, we are seeing that it is continued trading into the heart of high bottom pattern. No doubt today we are seeing a gap up opening, which is also considering as an inverted head and shoulder pattern, or we can also consider the ascending triangle pattern breakout after long time. If I'm not wrong, somewhere around we can see October month, Reliance has broken down its 50 days moving average, and after that, now again it's trading above its 50 days moving average. So clear cut breakout candidate. Today, whatever the gap up is happening, we are not supposed to chase, but any dips towards 1300 would be the great buy. Keep a strict stop loss below 1270. If this time price is not breaking down 1270, then we can expect price target to test somewhere around 1400 for sure. So Reliance look very much promising, and that's the only reason we are giving buy calls on Nifty also.
Okay. Meanwhile, we also have CLSA giving an outperform rating on Reliance Industries today with a target price of 1650 post the earnings. They believe mostly EBITDA and PAT have both come in ahead of forecasts. That's driven by upstream and retail performances. Geo has come in slightly lower due to a miss on the ARPU, even as the subscriber addition was better than estimates. Retail's EBITDA has come in about 8% ahead of estimates, is what CLSA has to say right now. Mayurish, circling back to the IT pack, which you started talking about, TCS versus Infosys versus HCL Tech or LTI Mandri, if you really want to add. Those are the numbers that we have so far. Is there any pecking order that you would have post the earnings have been declared? Should investors look at that way?
So again, Sakshi, I think HCL Tech was a decent set, but I think the commentary is something that did a lot of damage in terms of price action onto the stock. Obviously, I think TCS better than expected results. Infosys had a good set yesterday as well, and therefore I think generally for the IT pack as a whole, going by the numbers which have come so far, I think the underlying trend and thread seems to be pretty clear. Revenue growth seems to be decent enough. The expectations of stability in EBIT margins with outsourcing costs largely controlled at this juncture, expectations of the H-1B visa issues going by Trump's tweets do not seem to be so much of an issue as far as outsourcing is concerned. And obviously, I think the bench strength increase exhibited by Infosys yesterday means that demand might probably just stick around. Now, it really depends on in this quarter one of US, quarter 4 in our context, on how discretionary spending budgets are probably getting firmed up. But again, I think the entire landscape towards AI, Gen AI, is probably something that will keep the Indian IT sector probably in focus at this juncture. But let's remember rather the entire perspective that the valuations are sky high. A lot of
Yeah.
stocks we see in markets in India are trading at higher basis. We have to be really selective with this space.
Absolutely. Bringing in Kiran on as far as the technicals are concerned, within the IT sector, Kiran, any key stock which is looking better on the technical parameters right now that you would want to carry on post the earnings?
So looking at Infosys after the earnings, definitely it would be the risky trade for sure in IT sector. But on IT front, Wipro is our preferred pick. Reason being, if you look at the Wipro chart on daily price chart or a weekly chart price, a big ascending triangle pattern is giving breakout, and the support or the breakout level was somewhere around 270 to 80. And now from that level, we can see the 200 days and 100 days moving average also. So Wipro looks very much promising. If any dips towards, say for example, 270 to 80, that would be the accumulation zone. Keep accumulating, keep a strict stop loss below 260, and if prices is not breaking below 260, then we definitely after earnings or maybe after during this February month, we can again expect Wipro to touch above 300 levels. So definitely Wipro looks very much promising. Buy on the dips would be the strategy for the Wipro.
Okay, so better not to touch where the earnings are and therefore look at ahead of earnings. Therefore, Wipro at 287 looks better as far as Kiran is concerned. On the banking space, Mayuresh, Axis Bank, how do you read the numbers there? Do finally things look up? I think right at the beginning of the new year, a large part of consensus from the analysts was that they're going to be looking at financials for this year. That seems to be a safer bet because even if the markets are supposed to be volatile, this is one pack where attention could continue to sift through. How would you really look at Axis Bank vis-a-vis the larger ones, larger peers like ICICI, HDFC?
I think banking as a space should continue doing well. And again, I think the entire premise here was deposit growth are not growing at the pace at which one really desires. And that was the case a few quarters back. But I think it's coming back to normalization levels. If the one goes by the trends a couple of months back, and if this continues, I think the expectations in terms of CASA deterioration that we've seen for most banks, specifically the larger ones, should start uh, uh, should start stabilizing to a large extent. And therefore, I think as a space looks good. Axis Bank, again, I think growth was a little bit on the lower side compared to estimates. The bank has clearly pointed out that there is elevated provisioning that they've probably done. And
Hmm.
that does back and circles back to the concern whether you probably got some element of slippages coming down the line and some asset quality pressures as well. So again, I think banks as a space should continue doing well. The leadership stocks, large caps, ICICI Bank should report decent numbers. But in my opinion, I think a few of the mid-sized private banks and a few of the public sector banks should have a better show, at least as far as Q3 and Q4 is concerned.
Okay, got that. So financials could definitely keep in focus. This entire year should do better, is what my ratios of the view right now. Quickly, Kiran, before the markets open, your sense on Axis? Axis Bank, Kiran, quick word.
Sorry.
Axis Bank.
Okay. Looking at Axis Bank price chart on daily price chart, it has formed a bullish piercing candlesticks pattern. But today's gap down is failed that pattern. Number one. Number two, if you look at the weekly price chart, 1,000 rupees to 980 was the resistance earlier in 2023. Once the price taken off those resistance, then we have seen a secular rally. So any dips towards 980, 990 would be the accumulation opportunity. But looking at daily price chart, as prices is
Yeah.
trading below all important moving averages and it is in oversold territory also. So I would suggest wait and watch. Whoever holding this particular stock, keep a very strict stop loss of 980 and let's give a 1 or 2 day. If prices is not breaking below 180 and it is again sustaining above 1010, 1020, then only we can go for long. So as of now, wait and watch with the strict stop loss of 980.
Okay, the markets are open now. Again, all the major indices are down in the red. You can look at the Nifty that's opening about 23,216.4% of a dip right now that you can see on this one. Sensex is down by 0.4% as well. We also have the mid and the small caps in the losing ground. The advanced decline number is NSE advances are 918 versus 706 on the declining side. Let's look at these big numbers then. Infosys is opening 4.8% lower. 1834 is what you can see on Infosys right now. In tune with what the ADR numbers were suggesting, now down almost 5% at 1834. Reliance, however, is opening higher, 2.8% up at 1301. You can see Reliance Industries opening above 1300 levels right now. Let's also pull up the other ones. Axis Bank is down by 3.2%. That's the other big number that we were discussing, 1003 right now for Axis Bank. Let's also pull up LTI Mindtree. That was the other one that we are looking at in terms of the numbers that have come in for LTI Mindtree as well. In fact, we will also pull up 1.1% down, 5,905 right now for LTI Mindtree. Let's look at the other IT pack as well. So apart from Infosys and LTI Mindtree that declared, let's look at TCS and HCL Tech also as to how are they reacting. Okay, both of them are also trading muted with a negative bias right now. 2.2% lower for TCS, 4,105, 100 rupee lower for TCS also at this point in time. Right now, I think when we look at some of the other movers at this point in time, banking space, again, HDFC Bank is also lower, 0.2% of a cut for this one as well. So you're seeing across the board, the heavyweights are actually pulling down the markets as of now. There's some of the stocks within within the FMCG back, like an HUL that's up and about in trade, about 0.3% odd or so. So some of those FMCG names are actually doing better at this point in time. But even the broader markets, that's also down in trade. Kiran, quickly, looking at the markets opening, what would you say?
So looking at market opening, definitely Nifty is down because of the IT results. But at the same time, we can see the Reliance is doing well. However, it is not sustaining above 1300. So there are chances we can see some dip further. But as we mentioned that if Nifty is reclaiming again 23,200, then only we can expect some smart recovery. So for index trader, just wait and watch and buy about 23,200. The spot level is trading below as of now 20,200. So wait and watch for the Nifty. Coming to the Bank Nifty is exactly trading between the gap which has created yesterday. So if Bank Nifty, I'm discussing about the spot level only. If Bank Nifty is not broken down, breaking 48,700, then we can expect a smart recovery also. So if a risky trader is out there, they can go long Bank Nifty at current market price, which is somewhere around 48,800 to 48,900 on the spot level. Keep a strict stop loss below 48,700, and if prices is not breaking below 48,700, then you can expect a smart recovery towards 49,300 by today only. So definitely Bank Nifty looks good at current market price. The risky trader can go long.
Okay, got that. Coming to you, Mayuresh, then anything that catches your attention in the opening now, Mayuresh?
No, I think Sakshi, one really has to take it easy because I think let's wait for the Trump swearing in and what happens
Yeah.
because the markets is going to be extremely volatile. You're also approaching the weekend at this point of time. So no rush, rushing into the market. You would have seen I'm a little cautious for the last 2 weeks anyways.
Yes. Absolutely, no rush. At time to be a little, have a little wait and watch kind of an approach that even Kiran says, cautious notes that even Mayuresh is pointing out. All the sectors, barring consumer durables, healthcare, or oil and gas, seem to be down in the red today. Nifty Bank down 0.7%, autos down 0.8%. You have FMCG flattish with a negative bias, but some of those are actually looking up. IT down by 2.3%. That's the heavyweights playing their part as far as the decline is concerned on the Nifty IT. Metals flat, pharma absolutely flat, PSU banks down half odd percent. Private banks also down by about 1.1% in trade. Realty 2/10% lower right now. So that's as far as how the sectoral picture is growing at this point in time. Looking at the Nifty, right now you have Reliance Industries as the top mover, 2.5% higher. Hindalco up over a percent. Coal India, Tata Consumer Products, and Pharma are the other top five movers as far as the Nifty is concerned. On the lower end, again, Infosys now down over 4%. Axis Bank, Trent, M&M, Kotak Mahindra Bank. These are the ones that are among the top laggards right now. Okay, Mayuresh, another stock that I wanted to get in focus is MobiKwik as well. Why? Because they have again got in touch to give out loans now. How would you really look at this one? Of course, we were looking at it in sync with Paytm and how competition is increasing in that space thus far. But the way it is now growing, it's profitable. Piramal Finance now has come on board to probably extend loans and between 50,000 to 2 lakh rupees. What would this augur for MobiKwik particularly?
I think innovations will keep on happening for the space itself, actually. So there is no two ways about it. And if they have to grow, I think they have to innovate, do partnerships, and that is what precisely they are doing at this juncture, specifically for a fintech platform, stroke aggregator as well. And therefore, I think how these numbers stack up over the next few quarters. Whether there is consistency in numbers, are you seeing some element of delinquencies in new business lines that you're probably looking at? Are all elements to be seen only in perspective and very difficult to forecast. And therefore, I think you'll have to probably wait and watch on all these announcements that are probably happening. Might create a sentimental effect, but unless it reflects on numbers, they're very difficult to take over.
Difficult to take in focus right now. Okay, we'll keep an eye out on this one as well. Another stock that I wanted to bring in is Havells as well. Kiran, I'm talking to you about Havells. Of course, this has gone through its fair share of an uptick in the last year, 2024. There was a lot of focus in the wires and the cables area. But the earnings have come out certainly muted for its wires and the cable segment, particularly, and slightly lower than the estimates as well. How would you look at Havells right now? Do you think it is something that you could still look at positively?
So looking at Havells, if you do analyze the daily price chart, definitely stock price is trading below its 200 days moving average for sure. But previously during 2024 April to May month, stock price is consolidating between 1500 to 1400, and from that price we have seen a massive rally also. The similar way now again prices is trading below its 1500 1600 level, but it is consolidating between the 1500 to 1400 level, and today's up move is clearly showing that reversal can happen. So one can go long at current market price, keep a strict stop loss below 1500. If 1500 is not broken down, then we can expect price target to touch 1700, 1800 for sure. So looks very much promising. However, at current market price, one can go long with the 1500 stop loss.
Okay, got that. Irish, you did point out something very important that, let's wait and watch for the Trump swearing in. And I think the markets also are waiting with bated breath to see how things will shape up and will probably look for some direction going after. Um, Tell us, in your own assessment, what is it that Indian markets will look at, will be most vulnerable as a segment or as a partner when Trump really assumes office? What is it that is, on the back of the mind, probably coming in as a big concern for the markets?
First thing actually is the unpredictability of Trump himself, right? I don't know whether what he's going to announce, nor does he. I'm pretty sure. So I think he's very, very proactive, very spontaneous when it comes to all this. But when we analyze that markets with India, a large part of the tariff imposition that might actually happen, and compared it within various other countries, specifically the emerging pack. I think the tariff impositions that are probably happening or expected to happen on a reciprocal basis, if that does happen on an accelerated basis, India might be one of the least impacted economies across the globe. But again, I think from a trade perspective, I think we import lot more in terms of goods rather than exporting. I think IT services is a totally different ballgame altogether. And you've heard his tweets and comments in terms of H-1B visa, qualitative assessments in terms of the data sets and the intellectual proprietaries that the IT sector probably exhibits for the sector as a whole. But outside that, if you want to look at textile, chemicals, shrimp feed, seafood, I think a large part of the tariff imposition, India is relatively better off compared to the rest of the pack. And therefore, I think we'll be the least impacted in all these scenarios as well. But I think it's interesting to see what it probably comes up with. And therefore, I think the markets are waiting with bated breath on what few days probably pose from a Trump administration perspective.
I guess time will tell, and we will have to wait 3 more days before we see that happen. And finally, we will get to see whether the markets have anything to worry about or nothing at all. Let's actually look at the other parts also, Mayuresh. Auto space is something that's going to be getting into an exciting zone. Bharat Expo is starting. A lot of new launches will be taking place. So again, a lot of excitement around the EV space, the hybrid space, the newest technology that could be coming in. What are you excited about here? Do you think, what do you make of the sector as a whole as of now as well? Do you think this will again fuel some spirits back into the sector?
Possibly, and I think the new launches are looking very, very exciting. I think look at the electric mobility launch that Mahindra is probably doing, the hybrids that Hyundai, Maruti is coming out with, and the electrical mobility platforms as well. So I think it's very, very exciting. Aerodynamic shapes, a lot of content and features within the car itself. Brings us back to the point that competition will remain very, very intense as far as the auto space is concerned. Obviously, on the higher base, the next 2 quarters might be a little tough. Light might be a little bit tough as far as core numbers are concerned, specifically absolute EBITDA, margin performance, so on and so forth. You've seen some element of input cost increases, which have got passed through in the Jan prices as far as few select auto companies are concerned, Maruti, M&M, as an example. And because of all these factors at play, I think the next 2 quarters, I think will be defining for the sector as a whole. Obviously, when you talk about EVs as well, I think the infrastructure development is equally important. And you're seeing massive crunch of infrastructure, which is probably not there at this juncture. And therefore, I think there might be a periodicity in terms of some element of earnings softness that might get exhibited for the OEM players. For auto ancillaries, I think it's a totally different ballgame, actually, because they are catering to not just the EV makers and the platforms, but also the existing ICE vehicles. And therefore, I think a mix of both of these should ensure reasonable business as far as the original equipment manufacturing business is concerned. A large part of the revenue will also derive from the replacement market and pricing remains in that period. So from a personal perspective and from a perspective of how we look at it at markets within the of EPS rating, RS ratings, expectation of earning stability, institution holding, I think auto ancillary selectively might be a
Yeah.
better play for the next year.
Okay, got that. Kiran, coming to you, slight recovery from the lows is what we are already seeing as we inch closer to the first 15 minutes of the candle. Mid caps, especially, about half odd percent of a recovery is what we can see. How are you really looking at the market right now? Where is it your attention is getting drawn to?
You can look around the metal sector. Metal sector is also giving a very good bounce, and from the starting point only. Sector is looking good. Again, some PSU stock also doing good. So Coal India we are tracking. So since last 4 days, stock price is trading into the heart of our water pattern, and today also Coal India has crossed this 2 days high. So we can expect a good rally in on Coal India at current market price. You can go long, keep a stick stop loss below 380, and you can expect price target of 400. One more stock which we are liking from metal sector, that is Vedanta. If you look at the Vedanta last 4 days, again stock price sustaining about 200 days moving average, and there are chances we can expect price to regain the momentum and touch 490, 480 level from the current market price. So one can go long, keep a stick stop loss below 440, and Vedanta is also look good, and Coal India.
Okay, got that. So that's, I think, something that we will look at. Mayuresh, last question to you. Tell us what is it that is most exciting you in this current realm? You did say that there's a lot of cautiousness that you are keeping in mind, but is there any space that is, garnering your favor ahead of the budget? Railways, defense, anything of that sort? Maybe sugar?
Also, I think all these sectors actually are something which will remain in flavor, right? And as the budget draws near, there are large expectations of the market of budgetary allocation, which will happen, large order wins, which will happen over the next few quarters. And therefore, I think the sector will remain in focus. However, I think from our standpoint, as we see it, and where we see it from a Panray perspective, which is our institutional software, the sector rotation map is clearly getting skewed towards defensives at this juncture. Based on what we are probably getting as data feeds, not just locally, globally as well, emerging markets as well. And therefore, I think healthcare as a space, and within healthcare specifically, hospital stocks as a space, in my opinion, should have a steady show going forward. I think this is where our belief is. There might be a consistency of earnings which might get reported. Where a large part of the market, as I said in my opening remarks, might lack that. So what we look at it as EPS ratings might get strongly reflected to these hospital players. So I think within the pocket right now, I think one pocket which might have stability in earnings might be these hospital stocks.
Okay, got that. Well, thank you so much, Mayuresh, for being with us in this morning edition. Always a pleasure to listen to your wonderful insights that you shared with all our viewers. Hope you have a great time, and we're going to be meeting soon around Donald Trump swearing in and assuming office as well to see how things shape up for us back home. Thank you so much.
Thanks, actually. Always a pleasure. Thank you. Always a pleasure.
Thank you. All right. We'll continue to do our conversation with Kiran and to spot some stocks in this current market. The Nifty Bank is losing more ground, Kiran, about 0.9% lower, 469 points of a cut can be seen on this one. So that's the weaker link as of now. But what is it that you're looking at in the market right now? Any key stocks that have caught your attention?
So on FMCG stock, you can keep eye as we discuss about the metal sector. Another sector which we are liking, that is an FMCG. If you look at the FMCG Nifty chart, the stock price is trading at index price is trading near the support 55,400, 55,500 was the cluster support, and yesterday it has broken down, but today it again getting the momentum above that. One thing is sure, we can clearly see bullish divergence on daily price chart on Nifty FMCG. If Nifty FMCG is holding 55,400, 55,500 today, then definitely a sharp recovery can happen on Nifty FMCG stock and Nifty FMCG index also. So stock specific, which we are liking, that is Hindustan Unilever. If you look at the daily price chart of Hindustan Unilever, clear cut, it is taking a support of rising trend line. With that, it is also taking a support of falling trend line. Recently, Stock price has given a breakout from recent rectangle pattern. However, did not sustain about 2400 and again fall back to his support level. So as of now, looking very much strong. RSI range shift is already happened. So one can go long at current market price. Any dips toward 23,020 would be the great buy. Keep a strict stop loss below 2300 and we can expect price target of 2450, 2480 in upcoming time. So HUL is also looking good at current market price.
Okay, got that. The other space, Kiran, that I wanted to discuss with you is the Adani Group stocks, particularly. Yesterday we were talking about how Hindenburg Research has shut operations that stands to benefit Adani Group as a whole since at least last 2 years. The group was marred by a lot of these reports that came in that led to a massive rout in the market cap and market valuation of the whole group as well, not once but twice over. Now, with Hindenburg Research shutting its operations, at least the clarity is that there could be no more, attacks coming in from Hindenburg. We don't know if there could be another research agency that will come up. That's only hypothesis, but at least this thing is out of the window. A lot of momentum generated over the last few days on the Adani Group stocks as of now. In fact, Adani Energy Solutions is also getting more preference from a lot of brokerage houses. Like Jeffries has believes that the growth story is intact. They have a buy rating, a target price of 1300 on Adani Energy Solutions. That means a 67% upside in its base case. A bull case scenario also suggests a 1624 rupee target. That's 108% of an upside right now. That's the kind of reports that are coming in. First up, Kiran, on the overall Adani Group stocks, how are you placed? And on Adani Energy, what would you say?
So if you look at the all Adani price, stocks, first of all, I would like to comment on Adani Port because Adani Port is one of our favorite stock, and generally we have seen on Adani Port one factor that whenever Adani Port is crashed by or price corrected by 50%, 60%, and after that it is giving a very good amount of rally. So recently, whatever the corrections has happened from 1600 level, it tested its 1000 level, so almost a 45-40% kind of a correction. Again, if any chance towards 1000 rupees on Adani Port, definitely it's a very good buy. Overall, technical, overall, fundamentally, we are very much bullish on Adani Port. So Adani Port is on our radar. We already given a buy rating or a buy suggestion to our client during this price corrections also 1,011, 100. We already give a buy suggestion on Adani Port. So Adani Port looks very much promising. Another, you asked about Adani Energy, right?
Yes, Adani Energy Solutions.
Okay. If we discuss about the Adani Energy Solution, the stock price is overall very much into the bearish pattern for sure on weekly and a monthly perspective. But if we discuss about the weekly perspective, daily perspective or intraday price chart, definitely some sort of reversal we are seeing, but it's look very much risky. So if a risky trader out there and he wanted to try and test it, he can go long on Adani Energy Solution with the strict stop loss of 700 because the stock price has very much volatility. So that's why we are giving a deep stop loss also. So keep a strict stop loss of 700. If 700 is not broken down, then there are chances we can expect price recovery towards 900 to 1000 rupees for sure. But it's a very risky call. Keep a stick 700 as a risky call.
Okay, got that. Another space that I wanted to discuss with you, Kiran, is the FMCG sector as a whole. I believe you were talking also about some of them, but particularly when we talk about this quick commerce trend and how FMCG companies are now looking at tailoring their price points for quick commerce to protect the local Kirana stores. Now, consumer good companies like HUL, ITC, they are actually creating exclusive product packs for quick commerce platforms, and that is to protect the Kirana stores to cater to the shopping habits that are changing for consumers. These packs are actually priced higher and tailored for online consumers, reducing the conflict between traditional retail channels and the quick commerce sales distribution as well. Now, what is being seen is that the smaller priced packets may actually disappear from the quick commerce apps. So, will also some regular packs of consumer goods companies, which are, these companies are reworking their strategies so that they can continue to protect the Kirana stores. How would you look at these FMCG players then, ITC, HUL, vis-a-vis the quick commerce giants like a Swiggy or a Zomato?
Right. As we discuss about the HUL as a near support, the similarly, as we discuss about the Nifty FMCG ITC stock price is also looking same. If you see the daily price chart, ITC has a very good support of 420, 430, and stock price is trading there only. The cautious part is that the ITC is trading below its all important moving averages, so there are chances some deep corrections or some deep price cut may happen. But again, 420, 400 is a very good level to enter on ITC. Even at current market price, one can enter. Keep a strict stop loss below 400, and if 400 is not broken down, then we can expect price recovery towards 480, 490 for sure. So ITC looks very much promising. Even whole FMCG sector looks very much promising. Reason being, last year FMCG remained quiet. We have seen the flat to negative kind of a return has been generated by the Nifty FMCG. And during the 2021 year, FMCG has generated, HUL has generated minus 9% return, which is surprisingly things are happening. So at current market price, risk reward ratio is very much favorable. If sector rotation is happening, the budget is on another corner. Again, the government would try to enhance the income of rural side or rural employees. Then there are chances this kind of FMCG stock can get the more attraction. So for sure, FMCG looks very much promising. One can go long.
One can definitely go long in the FMCG pack. That is something that Kiran also believes at this point in time, right there. Anything else that catches your attention in the current momentum now, Kiran? Maybe within the broader markets, mid and small caps, anything that you spot?
So mid and small cap, we would like to wait and watch. We are liking very much on large cap front. Reason being from COVID to till now, whatever the rally has been come, you can see the large cap has generated somewhere around 150 per 100 kind of a return, where small cap and mid cap has generated 250 to 300% kind of a return. So there is a big gap between the mid cap and small cap. So we are still not giving after this correction or after this chart has been destructed. We are not giving small cap and mid cap as our preferred pick. We are liking more on large cap side. So HDFC remain our preferred pick, HUL, Wipro, Reliance, those are our preferred pick. So we are asking our clients also, okay, return your portfolio, you can book your profits or even a loss on mid cap and small cap, and you have a safe bet of a blue chip company for sure.
Hmm. Okay. Kiran, coming back to then the large caps, let's look at Infosys again. Further slippage can be seen. It's now down over 5% right there after the earnings have come in. How would you trade Infosys now?
Looking at Infosys price chart, definitely after the result today, the 5% cut is there. Stock price is trading below its short-term moving averages for sure. Now, if you look at the Infosys price chart, Infosys next support, we are seeing somewhere around 1800 to 1780, where the 200 days moving average is also there. No doubt about that, that momentum indicator is into the oversold territory due to this kind of a sharp corrections. And also you can see on daily time frame, there is a rising trend line support on Infosys also. So multiple support we can see from 1800 level. So we can identify good support at 1800. Bottom can be made around 1800, but as of now there is no sign of reversal. So it is better to wait and watch only. Keep a strict stop loss below 1780. Whoever holding this particular stock, and for the fresh buying, we would like to give a wait and watch kind of a status only.
Okay, let's come to Reliance Industries again. Again, like we pointed out, strong Q3 that has come in after 3 quarters of a lull performance. Finally, a strong Q3. 1 year of negative performance of Reliance Industries. Finally, the shares are up nearly 5% in trade today after the earnings came about. It went past 1300 as well. For Reliance Industries, what would you say, Kiran? Is it time to accumulate?
Yeah, definitely. Reliance is very much promising, as we discussed in the morning also. Okay, we would not like to chase this gap, but whenever the price is corrected from 1300 to 1280 level, it is a good opportunity to enter. So definitely at current market price, one can go long, keep a strict stop loss below 1270, 1280. Sorry, 1270, 1260. If prices is not breaking down below 1260, then we can definitely again expect Reliance to touch 1320, 1350 level for sure. So looking very much promising and Reliance at current market price, and that's the only reason we are asking our client to shift your portfolio from mid cap, small cap to large cap.
Okay, got that. So that's the view that's coming in. Another stock that I wanted to discuss with you today is Indus Tower also. There is a reason for this, Kiran, because global brokerage firm CLSA added the stock to its high conviction outperformance list. Now, erstwhile favorite, They have given a 575 rupee price target. And, this is the first time that any brokerage has actually given a target of 575, touching this, the highest among all the analysts which have been covering the telecom stocks thus far. What is your own sense on Indus Tower after the recent consolidation has played out?
So looking at price chart, definitely the stock price look very much promising. Falling channel breakout is there. No doubt stock price is trading below its long-term moving average is like 100 and 200. But on daily price chart, the double bottom pattern breakout is double bottom is forming out. The breakout level would be 375, 380 level. Once the price crosses that level, then definitely we can expect prices to touch its recent high of 450, 460 level. So not sure whether prices will go at 500 level, but as of now, looking at this double bottom pattern, which is getting breakout at 370. So we are giving conditional buy above 370 level. After 370 crosses, you can expect somewhere around 400 level and 420 level kind of a target on Indus Tower for sure.
Okay, then. Well, time to wind up the morning session then. Kiran, thank you so much for being with us in this morning trade to help us out with various stock strategies on the overall markets and ideas right there. Appreciate you being with us as always for sharing all these views with all of us and our viewers right there. Let's start winding up. Of course, we are seeing the Nifty hover at 23,199. There's still about a 0.5% of a decline that we can see on this one. We have mid caps that are down 0.14%, small caps down 0.4%. You have the IT stocks that are declining the most among sectors, 2.6% lower. Banks also down by 1.3% as well. That's as far as some of the indices are concerned. Top gainers, when we look at even the broader markets, show you some exciting names. GSPL is up by about 8.7% within the broadest index. Macro tech developers is up 5%. You have FACT that's up by 4.4%. Rashtriya Chemicals Fertilizers 4% higher in trade as well. Whereas on the top losers end, you have Sterling Wilson Solar that's down 6%, Infosys, Axis Bank, Varun Beverages. These are the pockets that are actually slipping in trade as of now. Let's even look at in the morning trade right there, any key stocks that we can pick out from the 52 weeks high list. None. Let's look at 52-week low list. You have Axis Bank at 52-week lows after the earnings and Network 18 Media as well. Most active stocks by volume. Let's look at, you have Yes Bank, Reliance Industries, Ircon International, IRFC and Zomato among those stocks that are most active by volume. Those with most active with value include Reliance, Infosys, Axis Bank, again, those earnings name. You also have Kalyan Jewelers, that's down 3%, and some of the other stocks like Havells and RBNL that we pointed out right there. So that's as far as the morning action is concerned, viewers. We'll wrap it up at that, but we'll continue to see you around the corner. We'll continue to track for you the market momentum through the course of the day. I'll see you next at 12 noon with daily calls. In case you have any questions on your stocks and in your portfolio, come up with those questions and we can take up all of those at 12 noon on daily calls. Stay tuned.
Mr. Kumar Subhaya has joined us. Namaste and a very warm welcome to you, sir. Sales for the quarter gone by jumped sharply at 3,300